Devang Mehta also joins us on the show. Devang, hi, good to be speaking with you. What are you doing in the markets right now? Any fresh stocks that you have managed to recommend to your clients? Any fresh ideas?
Anisha, I think I'll talk more about themes and sectors rather than ideas, and of course I'll give certain examples on the way. But yes, what we feel is that both the sides of the market, be it consumption or even be it capex, both have come back with a bang. And I think post the elections, post the budget, and post this volatility that we saw a couple of weeks back during the yen carry trade, I think market has got from strength to strength. So whichever sectors were not performing, be it earlier FMCG companies or certain auto companies or even discretionary consumption companies, the likes of Titan, the likes of Trent, just giving certain examples, right? All these companies have come up with good set of numbers. Trent was sort of a market beating number, which I think nobody sort of imagined. And this has been one of our portfolio stock for most of our clients. And this has also come up with great set of numbers. So again, I think on the ground, if you look at, there are certain sectors which have started to do very well. Even the rural consumption, if you start to hear, even the tier 2, tier 3 cities that started to pick up a bit. And the capex side of the market, which was people started to write it down that power ancillaries, capital goods, infrastructure will not do well. That has again certainly gone for a toss. So I think again, both the wheels of the economy running very well, both doing well, will finally, I think, lead to credit growth also moving up slightly. Yes, we know that there's a deposit growth issue with the banks, but most of the money is coming towards capital markets and wealth management type of businesses. I think this is where financialization of savings has also started to again go forward. So my sense is, yes, a combination of sectors related to capex consumption and again certain sectors in the credit growth will sort of be a good investment portfolio if somebody has a 1.5 to 2 year horizon.
Right. Okay, Devang, stay with us. Lots more to talk about. The one stock which is in focus today has been Nykaa, and this new age tech platform company has really been on a tear. In fact, the marketing spends also have been on the rise. Is the company then gearing up for a robust future growth ahead? Let me take it across to Snehi and get in the trend analysis. Snehi?
Well, yes, so Nykaa's con call transcript was released yesterday, and one thing that stood out was the outlook that they have given on marketing spends. Now, in quarter one, marketing spends were higher by 60 basis points for Nykaa, and the management has said that the marketing expense will most likely be in the range of 8.5% to 9% going ahead. Marketing and advertising expenses have gradually increased on a year-on-year basis since quarter 2 FY23 for Nykaa. Now, if you take a look at this on a sequential basis, of course, because of factors like monsoons and seasonality as well as festive season, you have a lot that changes in terms of marketing spends. But a real trend is being spotted on a year-on-year basis, because if you compare quarter 2 FY23 to quarter 2 FY24, or likewise Q3 FY23 to Q3 FY24, even if you take the latest numbers of quarter 1 FY24, you had marketing coming in at 8% as part of the net sales value. In quarter 1 FY25, that has gone up by 60 bips, like I mentioned, to 8.6% of the net sales value. Now, when you take a look at it in the absolute terms as well, in quarter 1 FY24, the marketing spends were 971 crore rupees, and in quarter 1 FY25, that has seen a big jump coming in at 1,268 crore rupees on the marketing front. Marketing support revenues have also grown by 44% on a year-on-year basis in quarter one, which is a key positive that is coming in, and brokerages are also liking this. Quickly taking you through what the quarter one performance looked like for Nykaa. Revenue was up 23%, PAT up 2.5 times, and EBITDA was up 30% on a year-on-year basis. Nykaa increased its existing majority stake of 51% in Dot & Key to 90%, and they also picked a majority stake in clean beauty brand Earth Rhythm as well. So that was quarter one for Nykaa, but well, yes, marketing spends and a trend is being spotted on a year-on-year basis on that front.
Thanks for that. Watching out for Nykaa. And not just that, overall urban consumption as a theme is doing quite well. Take a look at Kalyan Jewellers for right now. Of course, there was a large trade that happened on that one, and that's the reason of the heavy volumes. But nonetheless, that stock has been doing quite well. And of course, Titan 2 has been something which has been in focus. It was a softer Q1 that happened for them, but they are hopeful of an improvement going forward. In fact, this is exactly that we discussed with the management of Titan earlier in the day. Hear out what they had to say.
One of the things which has been in the making, in the building, is actually the differentiation that Titan brings into every category that it operates in. into the wearables category as well. And we expect to see some strengthening of all that during calendar 24 and early parts of 2025. This is a category that we were a late entrant into, as we have spoken even in the past. And to that extent, it has taken us a little longer to build that differentiation. And it is through that differentiation that we will build a business which is very strong in a customer value proposition front and delivering reasonable returns to the company and in the overall portfolio as well. And we expect to launch, there are many new products which are fast tech, as I would call it, bringing in the technology and fashion combination in the smart wearables line up in the next many months. And through that, we want to build that differentiation in the market and do better than in the past.
We didn't come from the real estate business, so we didn't know the business. We didn't come from the real estate business, so we wrote our own rule book. And I think our rule book seems to be working for us. I think today we have built one of the most formidable brands in Bombay market. We're delivering all our projects at least 2 years ahead of schedule. Our new project will be 2 years and 6 months ahead of schedule of RERA commitments. So we built a solid brand. You're absolutely right. Even Bandra, the bookings have been very strong. The reports that have come out show we're the number one in terms of sales in Bandra and Thane. Both markets we're number one. So that's a heartening and a rewarding feeling that in a space which is 25,000-30,000 developers, you're in 5 years right on top. That was a really lucky acquisition that we made, more a merger between our engineering business and Many Engineering. Many's got a lot of good skill sets, especially in titanium and aerospace, etc. The thing is, the merger has just finished a couple of months ago, and we have some big plans. So it's all on the drawing board, so I can't be very specific.
Sure.
But yes, there's a huge opportunity in that space, and specifically with Make in India. We are evaluating quite a few opportunities there.
Right. Devang, where within the consumption end or spectrum, I should say, are you comfortable putting in fresh money to work? I mean, the K-shaped recovery, of course, has played out very well in the entire premiumization theme since COVID. But do you think now it's time to go bottom up and perhaps get an exposure to the rural plays?
Yeah, Aisha, a very good question. I think I was just ready to sort of go after looking at this interviews of Titan management as well as Raymond. I think very clearly one needs to be, yes, both bottom up as well as top down, because first you need to understand the theme very well, whether the theme is going to run well, whether the sector is going to do well. So coming back to business, I think very clearly these are our favorites, the companies like Titan, the companies like Trent. I just talked a couple of moments back that these are companies which are on the discretionary consumption side. Now just look at a company like Trent, right, from a Zudio to a West Side to a Zara. I think they have across the spectrum of people. They are sort of proxy play to the aspirational Indian, right? Even Titan has everything and anything under the belt, right? From the watches to jewelry, which is the largest segment, where they're trying and expanding their market share, and it's the most trusted name over there, right to Fast Track and other watches, as well as the Taneria, which is the sari brand, which is across malls they are now setting up. So I think it's not only a retail play, it's a discretionary consumption play, it's an aspirational Indian story play, and plus most of these companies just trade at a bit of premium valuations, but they sort of command that premium valuation because they give up that type of numbers, and the management commentaries are always sort of very encouraging. So my sense is that in discretionary consumption, Titan, Trent are already the poster boys in that sense. Also the hotel play, which we love to talk about, companies like Indian Hotels, companies like EIH, where the average room have been growing. The demand is growing at 13-14%, and the supply is growing at 3-4%. I think hotel as an industry also has some legs to go for the next 2-3 years. Again, on the back of discretionary consumption growing and luxury consumption also growing.
Okay, so that's the word coming in on urban consumption, Titan and some of those names. But overall, pharma and chemical as a basket has also been doing quite well. And RIL ahead of the AGM is also something that we are watching out for. In fact, Prabal Singh joined us earlier today to talk to us about what to expect from the oil and gas space, because energy as a basket is under pressure today, but otherwise it's been doing quite well. We also talked to him about what his expectations are from the RIL AGM. Hear out what he had to tell us.
The Reliance AGM has almost, it's become sort of this blockbuster event every year where we tend to tack on a lot of expectations about, huge announcements that may or may not come. I frankly would not want to hazard a guess. If we look at the annual report, very clearly, I think the focus now is starting to shift towards renewable energy milestones. So one would look forward to any specific milestones or timelines around the setting up of additional factories with respect to the four legs of their renewable energy journey that they have been basically planning and working on for the last 2 to 3 years. So that would be one. And second, any updates as far as the unlocking of value of the retail and geo business, which has been a long time coming. I think those are the two aspects we probably look forward to in this AGM.
Okay, so that was about Reliance Industries, but GMR Airport, that stock has seen quite a bit of turnaround. In fact, let's pull up the YTD chart or maybe a one-year chart, and that will tell you the kind of momentum it has seen. Jefferies had recently initiated, you saw that backing coming in from Chris Wood as well, and there are a lot of investors which have turned positive on that one. In fact, I got the opportunity to catch up with the management at their Goa airport, that is MOPA. Hear out what interesting bits are we going to cover there.
Our whole focus is to how to quickly turn our airports into profitable entities, and how, after meeting all stakeholder commitments, which is basically revenue share to the government, how we can start to service our shareholders who've been waiting quite patiently now for the last 10 to 15 years to start getting dividends from the airports. So our first focus is that, and interestingly, in Hyderabad, we should, it's already profitable. This year we expect dividend flows
Profitable at the bottom line itself, not just EBITDA.
Yes, yes. Okay. And we expect dividend flows from Hyderabad to the listco start to happen in this current fiscal year itself. So, our whole focus is profitability and also start taking our airport platforms to a level where we can start giving dividend out to our shareholders in the next 3 to 4 years' time.
So next 3 to 4 years, within that we'll see the dividend coming for the shareholders, or after that?
After that.
Fair enough. At least that clarity is indeed appreciated.
Right, okay, that exclusive conversation. Stay tuned to ET now for that entire piece. In the meantime, it's the usual suspects. Interglobe Aviation, Indian Hotels still holding out well. Astral has made a decent jump up. That stock holding up 3.25%. Piramal Enterprises is now sitting at a gain of about almost 3% or so. And then Godrej Consumer Products, which has also spiked up about almost 3% as we speak right now. Bunch of other names which have also been in, focus. IREDA, the board is looking at a sizable 4,500 crore rupees fundraise. So that stock has really been on a tear from the word go today. This Paris Defense as well, the Ministry of Commerce has granted an industrial license for manufacturing of defense products for the next 15 years to them. That stock locked in upper circuit. And then, of course, there's an Aarti Drugs, TCI as well. The boards have fixed up a date for a buyback mulling. So both of these stocks as well are in focus this afternoon. But Devang, just wanted to figure out what is it that you're doing or recommending right now for defense holdings, obviously for those who are in the money?
Yeah, I think most importantly, one needs to now identify the men from the boys when you talk about themes like defense, when you talk about themes like railways, which had a dream run in the last 3-4 years. The stocks have given you 10-fold, 15-fold, 20-fold returns. Yes, there is some profits to be booked on the table, for sure, maybe at least a 15-20% type of profits to be booked. But most importantly, I think now it is time to get more into proxy plays. Just a simple example is that while you talk about railways, while you talk about defense, there are bearings which are required everywhere. There is motion management which is going to be required everywhere. And there comes companies like Timken India and other bearings company or other motion management companies which supply to this, which also manage the sort of annuity type projects for them. So they do the maintenance stuff as well. And if there is some replacement required, they are the only companies which you again go back and ask them for the replacement. So these are type of companies which not only are niche in terms of their products and niche in terms of their services, but this is the company which has an operating profit margin of roughly around 20-23%. So these are the companies we are sort of recommending, which are more proxy plays. We know that the business is going to thrive for the next 3-5 years as capex thrives. So these are proxy plays which probably one should look into while we talk about defense and railways.
Okay, watching out for some of those proxy plays. That's the word coming in as far as defense is concerned. But time now to take some of the BTSC trades from a technical experts. Naresh, what's the BTSC or STBT idea? Naresh, you'll have to unmute yourself. Yeah.
First is a buy on Tata Communications with a stop loss at 1900 and a target price of 2000. A 10-day range breakout here. Second is a buy on ONGC, which has corrected a good 4-5% from the recent top. 320 is a good support zone. Expecting a bounce back here. Stop loss at 320, target price of 332.
Okay, and Kunal, what about your recommendations?
So the first one is a buy on Bector Foods. That's a chart which is coming back into a breakout above 1500 plus levels. So would look out for targets in the range of 1580. Stop loss could be kept at 1490. And the second would be a buy on Manappuram. This could be interesting to play the stock. For many weeks had gone through a consolidation on the 200-210 range. Today the stock seems to have finally managed to break out of this 210 major resistance. So would look out for a higher target of 230. Stop loss could be kept at 210.
Okay, point taken. Prakash, actually, my colleague had also done a story on the new, norms or new policy which is expected for the public sector entities. Let's take it across to him to find out what additional details is he finding out. Because Prakash, of course, the PSU stocks have seen a massive re-rating, but what's the plan that the government has for them from here on?
Yes, we are learning from our sources that the government will continue to move forward with the new public sector enterprise policy. We are given to understand that major tweaks are likely in new PSE policy despite change in disinvestment strategy. As you are aware that the government has adopted calibrated disinvestment strategy where disinvestment transactions will be taken forward based on market conditions. But the sources are informing that the existing PSE policy provides flexibility in timings of disinvestment. Therefore, no major amendments needed in existing PSE policy despite change in stance. A very significant development coming in. In fact, value addition and asset creation in PSUs will be given a priority. Sources are also informing that the PSUs are in better position now on back of multiple structural reforms. Core and non-core assets of almost all PSUs have been identified and priority will be given to the listing of non-core assets of PSUs.
Okay, that's the new PSE policy currently in the works, and that's the exclusive info that we're picking up on the same. But Devang, what else are your current overweights or underweights in this market?
We've been generally overweight on, as I keep on at the expense of being repetitive, more of manufacturing growth, more of motion management, more of energy efficiency, more of automation. I think these are the themes we have been sort of riding. Energy or power ancillaries or even capital goods for that matter. Very unique companies, very I can say decent proxy plays, right? From I used to talk about Siemens to Hitachi Energy to Timken India to PT Engineering, those type of engineering companies, even ER&D companies like L&T Technology Services, which are extremely core to their industry. The most important part that we focus when we buy this type of businesses is whether the size of the opportunity is huge or no. So the size of the opportunity has to be large. the company has to have a dominant market share, plus it has to sort of give you stress-adjusted returns. So that's the type of sectors that we are generally being in. And of course, with this, as I talked about a bit of consumption, we also like a lot of parts of even discretionary consumption, which are again delivering great numbers and robust commentary, plus generating free cash flows as well.
That's a take coming in on some of these stocks. Varroc Engineering is up 13%, and in the last few minutes, I think Capri Global has seen a bit of a spike as well. Kunal, any view on these two?
Capri Global is something which I do track, and the stock is coming back into a breakout, mild breakout, about 200 DMA, 215 to 16 is where the 200-day moving averages for Capri Global. The volumes in the last 2 days, especially yesterday, was much on the higher side, but I would still wait out for a breakout. I think the yesterday's high for the stock was around 226 mark. Today's high so far is around 216 to 18 levels. So if the stock crosses about yesterday's high of 226, then we can expect that this last couple of days of strong volume push could probably result into a turnaround for the stock over the near to medium term.
Naresh, any view on Vodafone Idea, because very heavy volumes on that one, and Varroc Engineering if you track that one?
So Idea has just taken a small tick in the last 1 hour, about to cross 1640, which was the high for the last 12 sessions. If that does happen, we could be looking at a move towards closer to 17.5. So looks interesting. Varroc is a single day move. The trend has been down for quite some time. For the last almost 2 months, the stock has corrected from 700 all the way to down to 550 to 520 levels. Recovery to 620 would continue to face resistance. So not very interesting, but Idea could be a trade for the short term.
Those are a couple of other buzzers in trade right now. Let's also look at the losing end of the market. Some of the gas names definitely are the ones which are ebbing off. So both MGL, IGL are in the week today. Tata Motors, M&M, of course, we've been marking as to how they've been ranked underperformers within the entire auto story, which seems to be somewhat stalling. In fact, I don't know if we can bring up the 1 week and the 1 month chart for both Tata Motors and M&M and perhaps draw a comparison over there. Okay, not on a 3-month basis for sure, but a 1 month and a 1 week basis, maybe you will see that red tick come by. Kunal, do you also feel that both Tata Motors and M&M have sort of paused for a while now?
Yeah, I think M&M has paused for a while, but Tata Motors, I believe, could probably have seen the best part behind it over the near to medium term. I think the stock has gone through a lot of stagnation. The indicators have started to get into a reversal mode. Volume patterns have started to reverse for Tata Motors. So I believe, we've seen the price points where closer to 1100 mark, 35 odd levels, there is certain amount of selling which emerges into the stock price. That means that we could be looking at a point where the stock is seeing a lot of distribution at higher levels, and that generally indicates that we could be looking at a prolonged consolidation or even a downtrend for the stock over the medium to long term. So expecting the stock to gradually move into a lower support range, say closer to 900, 950 odd, could be a potential downside target for Tata Motors.
Right, okay, that's the move coming in and what the auto story is currently. But Devang, there's been so much chat around autos, right, on whether or not the sector is hitting a slowdown. And I think questions came about when across the board you had, discounts being doled out from both passenger as well as two-wheeler manufacturers. I wanted to understand what your thought is currently on autos.
I think, yes, the industry went through a huge turmoil, and you are absolutely right, not only in the recent past, but also if you look at the last 4-5 years, right from COVID to the migration norms, which came into insurance, which came as a deterrent to a lot of even two-wheelers. I think this industry has gone through a lot of turmoil, and now what has happened is most of these companies which are sort of retaining their market share are getting rewarded. Companies like Maruti, which has traditionally been a very high market share company. Yes, of course, it lost a bit of its market share to its competitors, but again has come back best with what it knows, right? The petrol engines and maybe even a bit of hybrids, but not at all getting into the range where they are not that competent. So that has played out very well. I think the demand for autos has also grown for sure. That we know that the per capita consumption of automobiles in India, be it two-wheelers, be it four-wheelers, is on the rise. And I think, yes, with discretionary, we talked a lot about discretionary consumption. The first thing that comes to an aspirational Indian or a person who rises up the cadre is that he wants to probably buy a new vehicle. So I think the biggest revelation to me is that while people used to buy hatchbacks and sedans and post that used to go to SUVs, now SUVs are the the most highest selling cars across the spectrum. So yes, I think this premiumization is going to happen. Companies like M&M, Maruti surely benefit. Even two-wheelers like Hero MotoCorp, the likes of TVS also sort of benefits. And also the biggest beneficiary is going to be auto components, auto ancillaries. One needs to be selective over there because you can't be in everything and anything. But I think these are industries which will do extremely well over the next 2-3 years.
Okay, Devang, on that note, we'll let you go. Thank you so much for making time. In fact, Naresh as well as Kunal, thank you for joining us today.
If you like this video, then like, share and subscribe to ET Now.